prima facie, in a nutshell, are you bearish? Are you bullish? Are you neutral currently?
So in a nutshell, I would say the risk return is not attractive after the 16-18% rise that we've seen in the equity markets. I don't think that the challenge is really the Indian economy. I think our trajectory is fine. And in fact, the momentum is good. If you talk to corporates, I think their confidence is really high. I think with commodity prices coming off, they're feeling a little more comfortable, expanding in the post-COVID phase of growth. Having said that, I think the challenges are really more global in nature. And given that we are now at the high point of valuations relative to emerging markets or developed markets, given the challenges that we're going to see from the international markets, I don't think the risk return is attractive. So in a nutshell, risk return is not attractive.
Okay, great. Now let's expand that a bit. I heard you mention that India is fine, but the challenges on the globe might come about. There are too many out there.
Sure.
What are the top one or two that you think will have the biggest bearing on how risk assets perform and why?
Sure. So I think the more important one, according to me, is really the global slowdown. I think if you look at China, it is struggling for growth. I think 25% of the GDP is really real estate, which is struggling at this moment. And I don't think they want to stimulate that further. I think about 20% or thereabouts is really their exports, which is also suffering given global growth is a challenge. So China, which is 18% of world GDP, is struggling. You know that Europe is struggling because of the availability of gas, and therefore, I don't think there's a question of if there will be a recession, but when will there be a recession in Europe? And US, given the inflation that it is seeing, the Fed believes that there's no choice but to reduce the economic momentum. And if you add up all of these, US, Europe, China, Japan, that's probably about 60-70% of the world. By the way, I think 70 odd countries in the world are today feeling debt stress. So that's the nature of the world today. We've seen that in Sri Lanka, Pakistan, or even Bangladesh. But there are 70 other countries which are feeling the debt stress. So global growth is really a challenge. And if global growth slows down, it will certainly have an impact on India as well. I think you've seen that in the export trajectory. For us, I mean, you could include or exclude the export duty cut effects also. But regardless, I think the momentum is slowing from a global growth perspective. And we don't have the tools to stimulate demand because we've used all that up when the COVID struck. So our fiscal deficit went up to now about 6.5, 6.6. So we no longer have the luxury to stimulate our economy if we are suffering global growth. So that's, I think, the number one challenge that I think we will face, as you move forward. But Indian markets may be a little late to recognize this because, like I said, the current momentum is reasonably strong. And rightly so. I mean, I think, look, the best place, if you look around the world today, I think you're going to see that India probably is one of the best placed. We don't have structural problems that China, Europe, even America or Japan have. So as a $3.5 trillion economy with a balance sheet of corporates, which is very healthy, balance sheets of banks, which are very healthy, of consumers, which are very healthy, there is a structural opportunity of growth in India. That being said, I think in the shorter term, we are going to face these cyclical pressures from global markets. So my number one concern for the shorter term, which is visible right now, is global growth, which will impact India. Of course, my number two concern for India is oil and energy inflation, but it is not as much visible today. But that's my second concern, which I think can damage our story as we move forward.